Let's talk real estate. Many are predicting a crash in 2023, but as far as pricing goes, the markets have been surprisingly resilient. Prices have held up so far in most areas, but the number of homes sold has fallen off a cliff. I think we're in a weird time in the market cycle, kind of limbo, where the sellers think that they can get last year's prices, and the buyers are having to come to terms with the rates being double what they were a year ago. Buyers either do not want to pay the increased payments or are unable to afford them. The prices will most likely continue to slow down on their downward trajectory for the next year or so. But which areas will be hurt the worst and which will fare better? As far as pricing goes, the rates are the main variable that comes into play. But as far as dynamics go, not all markets are the same. There are two factors I am going to discuss, and it may seem basic, but hear me out. Supply and demand. Many people don't understand this relatively simple economic truth. Many areas of the country are experiencing net negative migration due to jobs leaving areas, and in certain states, bad politics. These areas are experiencing a decline in housing demand and can be further broken down into two categories. The first category pertains to areas experiencing a loss of jobs and industry due to automation and outsourcing, such as the Rust Belt. Many of these areas have not seen as large appreciations in housing in the last few years anyways, so they may not be in a bubble in the first place. There's a lot less new home building going on there. Many of these towns have a lower population today than they did 50 years ago, so there isn't much need to build. And since people are not moving there and are actually moving out, I don't expect the housing to decline drastically in these areas, mainly because they didn't increase in value much in the last few years. I expect these areas to see an increase in home prices over the long term, less than the 2% inflation rate. In some of these areas, it may actually make more sense to rent than to own. If your city has less people in it than it did 30 years ago, and the industry is leaving, you live in one of these areas. The second set of areas losing population are states like California, New York, New Jersey, and Illinois. These areas have a low supply of housing, but now the demand is also declining. The low supply helps them with housing prices, but the negative demand and the massive increase in housing values over the last few years could lead to a correction, not a crash, but a 10 to 15% pullback from where we are. Now for the markets that are going to get, as I say, decimated. We are actually seeing some of these markets crack, and some of them have gone down 15 to 20%. These are the markets that everyone has been raving about for the last few years, such as Phoenix, Boise, Nashville, Tampa, and Miami. They're markets that everyone is moving to from New York and California, New Jersey, and Michigan and Illinois. The home builders went crazy in some of these markets, building up massive tracts of homes that are yet to be purchased. And while some of these markets are seeing strong demand still, we will eventually see these markets crash. Since the pandemic is over, we are starting to see migration slow to these states. The overbuilding and slowing of what was incredibly strong demand could lead to these markets crashing. Some of these markets are up 100% in 3 years, so if they did fall 20 to 30%, it isn't the end of the world for most people, unless you bought recently with a 7% mortgage. If you are one of these people, you got the short end of the stick. In my opinion, the best real estate markets are the ones with strong demand and low supply. And this is hard to find because whenever areas drastically increase in demand, the home builders come in to meet that demand. Usually, these are small niche markets that the big builders don't have businesses in. Keep in mind that navigating the various real estate markets in the US and knowing how and when to invest is best left to a professional. So unless you have the time and knowledge to do it yourself, you should look at a professionally managed real estate investment firm.